Something huge is happening right now that's changing the way India builds its future. It's not some far-off idea, it's a real shift in the contracts for our biggest, most important projects. We're talking about insurance surety bonds. And in this explainer, we're going to break down how this one financial tool is quickly becoming the new gold standard. And just how fast is this happening? Well, the numbers speak for themselves. At the very top, we've got more than 44 central ministries and government departments that have already jumped on board. These are the engines of the central government, which tells you this is a massive shift in policy and trust. But it doesn't stop there, not even close. We're also seeing 67 central public sector undertakings. Yep, the absolute giants of Indian industry and infrastructure, they're all in. This isn't some small-scale trial run. This is a full-throated endorsement from the very companies building our nation. And just to complete the picture, this wave is rolling out across the entire country. We're talking over 32 state and union territory bodies that have also adopted these bonds. So from the very top in the central government, right down to the state level, the message couldn't be clearer. Surety bonds are the new framework of trust. So what's really driving all this momentum? Why is this happening so fast and with so much confidence? Let's dive in and break down what these insurance surety bonds actually are. At its heart, it's a really simple but powerful idea. The easiest way to think of it is like project insurance. In the old days, a contractor needed a bank guarantee, which tied up a lot of their cash and credit. A surety bond works differently. An insurer steps in and guarantees that the contractor will get the job done. It's a three-way agreement. You've got the contractor, the project owner, and the insurer who provides this rock-solid promise. Now, here are two little words that make these bonds a real game changer for the project owner. First demand and irrevocable. What does that mean? It means if something goes wrong with a project, the owner can claim the money from the insurer right away. No arguments, no conditions. It's pretty much the ultimate financial safety net. Plus, and this is the big one, they're built for the digital age. Trust is great, but verification is better, right? These bonds come with unique QR codes and are logged in online portals, so you can verify one in seconds, which makes them incredibly tough to forge. It's a really smart way to use technology to stamp out fraud. And here's another crucial point that you might not think about. This whole system spreads the risk out, so we're not just relying on banks. It brings in the massive financial power of Indian insurers and global reinsurers, who are basically insurers for the insurance companies. This makes the entire system stronger, and it frees up bank money for other loans that help the economy grow. Best part? It's all done at no extra cost to the taxpayer. Okay, now for the really impressive part. Let's take a look at the roster of who is actually accepting these bonds. I'm telling you, the sheer number and the quality of these organizations, it's the most powerful proof of their value. This isn't just a list of names, it's a story of trust from India's most important sectors. Leading the charge, you've got the real heavyweights. We're talking the Ministry of Road Transport and Highways, the Ministry of Railways, Ports and Shipping, and get this, even the Ministry of Home Affairs and the Department of Atomic Energy are on board. That's some serious confidence from the very top. And what about the builders themselves? Oh yeah, the National Highways Authority of India, Rail Vikas Nigam, the Dedicated Freight Corridor Corporation, NBCC, Engineers India. The organizations that are literally building modern India, they are all relying on surety bonds. The energy sector, just as committed. NTPC, Power Grid Corporation, NLC India, the giants that keep our lights on and our industries running have fully integrated these bonds into how they do business. And the momentum just keeps going with the industrial titans, ONGC, Indian Oil, BPCL, GAIL, and BHEL. Look, when the biggest names in oil, gas, and manufacturing adopt a new tool like this, you know it's the real deal. And this isn't just a Delhi thing. No way. This is a truly national movement, from the PWD in Manipur and Mizoram all the way to the Uttar Pradesh Metro Rail and Rajasthan's Power Corporation. And if we look west and south, it's the exact same story. Maharashtra's Road Development Corporation, Tamil Nadu's Highways Department, Karnataka's Power Corporation. This widespread adoption just makes one thing absolutely clear. This is a massive, nationwide shift. Okay, so we've seen the who and the why, but if you're a contractor or a business owner watching this, you're probably thinking, okay, but how does this all actually work? Let's walk through the process. It's a really clear, secure life cycle from start to finish. As you can see, it's super structured. It starts with the contractor's request and the insurer's underwriting, which is just the formal process of checking everything out. Then, a serialized, QR-coded bond is issued. The project owner can then verify it online instantly. And in that rare case of a default, a first demand claim is settled quickly. The whole thing is built to be transparent and efficient. And on the flip side, the project owners have their own robust checklist to make sure everything's legit. They check the insurer's license, confirm that on-demand wording is in there, they check the QR code online, and they make sure the dates in the stamping are all correct. Every single step is designed to build confidence in the system. And this one sentence from the model clause really says it all. Enforceable on first written demand without demur. That phrase, without demur, it's key. It basically means without objection or without hesitation. That language makes the bond as good as cash in the bank, providing ultimate security. So, after seeing this huge wave of adoption and how secure the process is, what does this all mean for you? Let's talk about the next step and how your business can actually use this powerful tool. Here's the main takeaway. Surety bonds aren't just an alternative anymore. They are quickly becoming the standard. Using them can free up your working capital from bank guarantees, which means you can bid for more projects and bigger projects. So the real question is, are you ready to unlock your next big opportunity with this smarter, more secure tool? If the answer is yes, or even if you just want to learn more about how surety bonds can give your business an edge, all the contact details are on your screen right now. Reach out to Chaitanya Prabhu. He's a trade finance specialist who can walk you through the whole process. Thanks so much for watching.